Hello and welcome to yet another video. Today I'm going to be creating a learning video on how you can calculate your returns on your investments like a professional fund manager. And you'll be surprised after watching this video till the end that very few do that, and if you are doing it, hats off to you. If you have don't know the how to do that, I'm going to give you the complete template of how to calculate the annualized returns, how to calculate your stock market return, whether your holding period is for 1 month, you're doing short term trade, it is, or you is investing in any other investment class. And sometimes this particular method can be useful for your property investments as well. So it is not only specifically for stock market, but it is very very important if you are doing stock market investing, because you're taking higher risk and you want to know what is you are getting out of these returns and effort and the risk you're taking. So hence, because I keep asking to my students and mentees, and I find this one thing is not everybody's calculating this returns. They always talk about absolute returns. It's very very crucial. So watch till the end and I will get started here. So what is the important here is I want to cover, recently 1 month ago I created this video or shared this video on your channel on Jan irrigation. I got some interesting comments about this particular stock, but I'm not going into that. More importantly, I said this is not for weak hearted, and this was part of my peaceful weekend investing lab portfolio. And this is where I kind of churn my portfolio to get some momentum based investing by blending technicals and fundamentals, and then work towards adding the capital for my long term shares. Okay, and this was a stock which I picked up and sold it. So I'm clear disclaimer, I'm sharing with you. So just for learning purposes, I'm taking this live example. If I were to calculate my returns like a fund manager, how I would do that, and that is the purpose of this video. And I will be sharing with you the whole Excel template. If you want that, share the stay till the end, and I will share the link to you so you can download that later. So let's get started. So you will learn how to calculate the um, returns like a professional fund manager, and what is the pros and cons associated with that also I'll talk at the end of it. Okay, and the purpose here is not to calculate or not to share the buy and why did I bought it, why did I sold it, because that you can put in comment box below and I can create another video if you are interested to know that. But I've just, for a simplicity's sake, I've just created an Excel sheet, and this is already having formulas in it. I will try to explain you the formulas, and if it's still not clear, I'm happy to have a further discussion on this so that you have a full understanding of that. And I'm 100% sure once I explain you, you will have a full clarity about it. Okay, so all you need is a certain parameters. What is the buy price of your stock? What is the sell price of stock? And what is the buy date of your stock? And what is the sell date of your stock? And if it is less than 1 year, you calculate what is your difference in the dates. In this example, what is the difference? And in this case, is 30 days. And I generally remove 1 day not to have a better calculation, but otherwise the Excel will give you 31 days. So in this case, I'm just taking off the buy date minus sell date, or sell date minus buy date, and you get the minus 130 days as your holding period. Okay, and after that, what is important here is you have to calculate, first thing is you have to calculate what is your growth factor. Okay, that is more important. First thing, you have to calculate what is your growth factor here. Growth factor is nothing but, it is a formula is what is your sell price divided by buy price, and you'll get a outcome which is 1.51. So this is your growth factor calculated. Okay, which is straightforward. You, if you were holding the stock, if you continue holding it, your growth factor is 1.151, which is your growth factor. Now how can you analyze that particular growth, use that as for your annualized gain. Okay, which is nothing but a CAGR gain, which is, you would see that everywhere is but understanding your growth factor is also important, because you understand that you are having a growth associated with that particular investment decision, and that is your factor which you're adding into your principal which you've invested. So growth factor, and you would raise that with 1 divided by time invested. Okay, what do you mean by time invested? Time invested can be in years, months, days, and whatever way it is. And in this case, it was 30 days. I'm considering as 1 month. So the formula comes in the growth factor, and you would raise it by 1 divided by, and now I am doing the monthly one, which is 1 divided by 12. Because if it was in days, I would use like 28 divided by 365 or 360. You can choose whichever date is convenient, because sometimes some people use 365, 360, and it is a leap year 366, but that's not going to make a huge difference here. Okay, and again, buy date, sell date can be changed for different people, so you can just apply that in any investment parcels you're doing. That is objective. So try and understand the concept here, not necessarily the specifics of the dates. So 1 divided by 12 is 1 month was my holding. So 1 divide by bracket open 1 divided by 12. Please make this important, because that's how you're going to get the right calculation. So when you do that, you get 141.76%. If I were to hold this particular stock for entire year, and if it stays, and it growth factor will be 141%, and if it stays in the same growth factor which is there, that is what it means. But I sold it off, but my annualized gain was 141% for that holding period. So for me, that is alpha I've generated, because now I've added, to my capital. If I put a significant portion on this particular stock, then you can imagine it will add to my capital, and it will grow my capital bigger, because which I can use it for long term investing. So this is how you start thinking like a fund manager. All right. Now, what is your CAGR calculation? Right. So that was annualized gain. CAGR will be, you are looking at -1. You take this, whatever you got as a annualized gain, -1 into 100. So you are 14,076% CAGR calculation comes out to be. All right. And that is a whopping number. So your compounded annual growth rate was humongous. To me, that is the leverage you're talking about. All right. A lot of people say, I'm going to take leverage and take that. Right. You don't need a leverage if you are able to generate that much of alpha to your portfolio in a short term. You are already taking the leverage from the market by putting that investment. Right, that is how I'm looking at it, because I'm only cash only. I don't take any options, I don't take any leverage from any of my brokers here. So that is what it means. Now, fund managers give two particular factor. If you would, a professional fund manager, they will look at what is my absolute gain. Absolute gain is very simple formula: stock sell price minus buy price divided by buy price into 100, which will give you for 51% 0.1111 51.11 percentage gain. You got absolute for holding for 30 days, and your annualized gain was 141.6%. That's the two key numbers you have to keep in mind. Now you can apply this formula for your any investment. For example, a lot of people, I talk to and say, hey, I bought this property, and I'm giving you example purpose, because then you will get a picture here very clearly what I mean by that. So because it works beautifully for long term, right? When you're looking at CAGR calculation, is if you bought a particular property, and I'm giving example, let's say for example 1 million or 1 crore, and you sold it after 10 years for 2 crores or 2 million, then just do the CAGR calculation by putting simple maths. Also, you will understand that it may not be a great investment decision, because by compounded annual growth rate, it may be just beating your fixed deposit. But if you factor in your interest you paid, or you factor in all the other costs associated with that, maintenance costs and all that, probably it might be a losing deal for you. That's why I say stock market is the best investment vehicle you platform you have, because you can, if you know the skills, you can have a better CAGR for your time, because and everything is in your control with less minimal impact in terms of, because you can just get in get out very quickly by a click of button. But again, when you're doing investments in property, it is a hard run, because you end up, you know taking a, it's illiquid in a way these days. Sometimes it takes long time to get fructify your returns. So this is what I wanted to cover as a whole. So what we talked about, and let's quickly talk about what are the pros and cons. And beautifully, it's just when you look at it, it is from the benefit side of it. You have a clear understanding. It's simple way of doing the mathematics, understanding it. It tells you what is your compounded annual growth rate, and what is the negative side of it. It doesn't factor in any volatility in this whole picture, because you might have different time periods. You have different returns, and the different unrealized gains, I would say, because you there is a volatility in the whole price before you sold it. That is not factored in. And again, if the buy price is your negative price or zero, then this particular formula will not work anyway. So these are some pros and cons of it. So just to summarize now, we talked about how you can become a fund manager of your own, and calculate it professionally. I hope it was useful. If it was useful, type useful in the comment box below, so that you are in the top 5% of people who know how to calculate the returns like a professional fund manager. Give a thumbs up to yourself, and you understand what is the pros and cons. What we did was we looked at it. What is the growth factor for it? How to calculate the growth factor? We looked at how to calculate the annualized returns. We looked at how to calculate the CAGR. We also looked at what is absolute returns. How do you calculate the absolute returns for a particular stock, right? So we covered a lot of ground, and now over to you. If you want the Excel sheet, put a comment box below your comment that you wanted. I will share the link to you, and you can enjoy with that. Till the next video, please have a peaceful weekend investing, and don't forget to subscribe to my channel. A lot of people are watching this video without subscribing, and it doesn't cost you a thing, and it also helps other like-minded people to join the channel and benefit from all this analysis which I'm sharing. I'll be coming up with regular videos going forward, so hit the notification bell so you get immediately notified. And tomorrow is a day when I'm doing the analysis for this overall stock market, and setting up how it's setting up for the next week. So till the next video, bye bye. Enjoy your weekend.